I don't fix and flip mobile homes, so I bring my friend Mark Bracey in to teach how to fix and flip them because I can. And it helps more education get out there faster, because if not, education dies, and that's a sin to me.
Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It, Passive Investing Edition. My name's Randy Smith, and I'm your host today. And we've got just another really, really great show with Adrian Smude with us today. Adrian, welcome to the show.
Thank you, Randy. I appreciate you having me here today.
Awesome. Glad you're here. So Adrian comes from a unique perspective and a new passive investing background that I thought would be really interesting for audiences to hear. He's the founder of Lifestyle REI and also the founder of Elite Level Mastermind. And his primary forte or focus in the real estate investing arena is in mobile home parks and mobile homes, all things mobile homes. So Adrian, why don't we jump in? Can you walk us through a little bit about your background and how you found mobile home investing and what you're doing today?
Yeah. So my quick story is I start out as a really bad tenant. I think we all started at some point, but I was a bad one. I mean, my friends and I, we got eviction notices for pudding wrestling parties, spaghetti wrestling parties, mud wrestling parties, parking the motorcycle in the living room. So the moral of the story there is don't rent to 20-year-old Adrian. What happened from that is I went and bought a house because I'm a problem solver. I moved my same friends in, the ones that helped me get evicted, and I divided my mortgage up amongst my friends so I would live for free. That's where I really learned the key to real estate, that I can live for free or make money. So I said, all right, I'm going to go buy another house. Now, at this point in my career, I'm only listening to the banks. And the second house, the bank said, well, you're going to lose a little bit every month if you rent it out, but it's okay. Real estate goes straight up. Don't worry, you'll refinance. Well, in a few years when it was time to refinance, the market was going down, and I had that adjustable rate mortgage we read about, and payment was going up, so I went from losing a little bit every month to a little bit more, and I eventually gave the home up as a short sale. Ding to my credit, ding to my ego, but really it was a ding to my integrity. And we'll fast forward. I end up at some REIA groups, the Real Estate Investors Associations, and that's where I learned about mobile homes. I had bought some more site-built homes, but I learned about the mobile homes there. So I went out and bought some mobile homes, and when I say mobile homes, I'm talking about the home and land together, like a single unit. And since then, I have transitioned my entire business over to buying single unit mobile homes with the land and renting them out.
Okay, so these are not mobile home communities. These are one single box on a piece of land. Interesting. Okay, so yeah, let's dig into that a little bit, because from what I understand, there's three different ways of investing in this space. Can you walk us through that?
Exactly. So there's the mobile home park that you alluded to. There's two ways to run those. You own everything, so all the homes, all the dirt. You own a big, flat apartment complex. Or you can own just the dirt and people pay you every month to park their mobile home there in a big parking lot. Now, I don't do that. This doesn't fit my life vision. Another way you can do the investing in the mobile home space is you own just that box and you pay someone every month to park it there. It's not technically a real estate transaction, but there can be really good ROI or return on investments. I've done those, but they're not a big part of my business. I like the middle ground that seems like most people have forgotten about or don't know about. I buy the single unit. I like the way you said it, a single box with the dirt, and I rent it out. So it is a transaction because we have that dirt.
Got it. Okay, so this is very similar to just traditional single-family rentals that our listeners probably know a lot about, but it's a unique niche within that. So what is obviously there's got to be some benefits to why you're focusing on this specific niche versus traditional single family or multifamily or something else. So maybe you can walk us through some of those benefits.
One of the biggest benefits is I like to be different. If people are watching, they see I'm in a bright yellow shirt. I'm known for wearing a bright yellow shirt all the time. I like to be different. And this is a space that not many people are in. So less people in it means there's less competition. And I can
Yeah.
help more people out. I can make more money. The
Yeah.
return on our investment is much higher. That's one of the big things that got me in it as well, is I was looking to grow faster. And if we have a higher return on our investment, we need less money and less properties to get to our goal. And then the one that people are starting to care about now is it's a recession resistant area. A lot of our mobile homes are in the affordable housing space, which most parts of the country is a pretty demand. When or if we're in the recession, what some point's going to happen, that demand's going to go up even more, and we're already there.
Awesome. So yeah, in this space, you're going out, and I suspect you're trying to find distressed owners or distressed properties that you can go in, almost use the Burr strategy, I'm guessing, not to put words in your mouth, but are you, is that how you're finding these, or are you just out searching the MLS looking for mobile homes on land?
Really, it's everything. So anything that you would
Okay.
traditional uh, homes, you just change the word house and put mobile home. Now, what has worked best for me are referrals, because other investors, they don't understand them, they don't want to deal with them. Maybe they're just too good and they don't want to buy a trailer. So the referrals from them, and then the same with realtors. Realtors,
Hmm.
we all know they get paid by the closing price. Well, if a mobile home has one less zero, they're going to do the same amount of work for one less zero on their check. They still want to help people. So the referrals have been some of my best uh, way I get my leads. But like you said, it's a distressed person. That's what we do as investors to help a distressed situation.
Okay. And so I know in the single family space you can spend, ten to $100,000 rehabbing these units. I would imagine the rehabs are not as um, maybe not complicated isn't the right word, but the dollars might not be as large in those rehabs to make those livable and attractive to a tenant that's looking to rent those. So what does that rehab process look like? Are there special materials? Or what else can you share about that?
You are correct. So I'm going to break it down kind of into two groups. Let's look at the older homes, and I consider an older home like the 1960s, 1970s. Those homes are not as high quality materials when they built them from the beginning. The nickname is wobbly boxes because they used to live wobble. It came off of the assembly line. I'm not going to go and put granite into those because the property can't afford it. I'm going to put usually a lot of wallboard back in. Sometimes if I'm replacing everything, I will upgrade it to the exact same materials as any other house, 2x4s,
Hmm.
drywall. But most of the time I keep it on the lower end, and that's the low affordable housing. But the other space, I kind of go for 1990s and newer. So a very new home in my world is the 1999. That's the newest thing I've ever bought.
Okay.
If I'm in that space, I will put much better quality materials in it. We are rehabbing one right now that we're probably going to be maybe $25,000 in the rehab alone,
Okay.
and it's going to be fully done. I mean, that's new AC, that's new cabinets throughout, floor covers. It's a good, strong bones though, and it's a
Hmm.
home that's worth $250,000.
Wow.
Obviously, the 1980s, that's just a mix somewhere in there. But in general, you
Hmm.
kind of want to, what is the property going to be worth? We don't
Hmm.
I don't want to sink $25,000 into a property that's worth $25,000. And
Right. Right. Yeah, that's interesting. I think there's I don't know if this is a perception or if it's actual truth, but do you see the value of these assets? Do they, because they're on land, are they appreciating in value like other real estate, or do they depreciate or decrease in value over time?
well, Randy, don't tell the secret that everyone thinks that they just go down in value. Don't let that out. that they actually
Yeah,
can go up in value.
I'm sure.
Yes, the land, like you alluded to, that's one of the big pieces.
Yeah,
Part of my strategy is I am land banking. I'm buying land that I call those my lotto tickets that a builder's going to come and buy me out one day.
yeah.
But I'm a cash flow investor, so it has to produce money every single month. Now, in that aspect, it has gone up. My stuff is about tripled in value in the last 3-4 years because people are
Wow.
buying yield. Now, on my older ones, the 1960s and 70s, the appraisal value, that's hard because it's investors buying and people owner financing. We don't have the bank world because the banks will not lend on them older than 1976, June 15th. And
Interesting.
getting back that old is very difficult. It is technically possible. So we have two ends of the spectrum. We have the cash cheap buyers, and then we have maybe investors owner financing it out. And a lot of times they do that at a premium.
Yeah.
So there's value there because we're really buying our income. That's what we want.
Hmm. Yeah, interesting. So as primarily a passive investor myself, I'm intrigued with. I suspect that there's even without accelerated depreciation, depreciation is probably much quicker on one of these assets than a traditional commercial or even standard residential. But what does this look like from a passive investing standpoint if somebody wanted to partner with you, either to provide capital or try to get some returns similar to what you're, or participate in the space essentially?
Yeah, like I mentioned, banks don't finance them. So that
Right.
either I have to bring my own cash, and I'm not scared to do that, but cash runs out. Doesn't matter how much we have, it's
Yep.
going to run out. And so now I can get owner financing, and that's not so rare in this space because sellers know that there's no bank financing, but it obviously doesn't work for everyone. So then the big way that we fund them is private money. That's,
Okay.
as you already know, people that we know, like, and trust. And the other hurdle there is there's a lot of private money lenders out there, but a lot of them don't understand mobile homes. So now they're scared
Hmm.
to lend on it. So now there's less
Yeah.
lenders within that space. So they have to get educated for sure to be comfortable with it. And if it's a 1960s, I would want a higher return because you
Yep.
have a larger risk of a property if you were to have to take it back or anything like that than, let's say, a 1990s. The same as I already talked
Hmm.
of, from me as a buying side, the lending side, I'd want the same thing. What is my collateral?
Hmm. Interesting. Yeah. Yeah. And that whole, from an investment standpoint, the whole land banking piece that you referenced earlier, um, that seems fairly attractive because there's a lot of different exit strategies potentially on the back end where if for some reason you have challenges or there's issues with the property itself, it seems like you could almost scrape these things and build single family or build whatever it is if that was something that could make sense on the back end. So interesting.
Yeah,
Okay.
definitely have properties like that. I've been buying more of those in recent years. And those are usually, from my experience, the 1990s models. I'm getting
Okay.
a lower return on investment, but I have that land that if the hurricane came through, so I'm in Central Florida, so we have to worry about
Okay.
it,
Yeah.
wipes one off and turns it into a hurricane missile. Well, now what can I do with that land? Could I move a new one on there? Can I sell it to a builder, like you said? I have
Yeah.
one that I'm hoping is going to be commercial within my lifetime. They built a Dollar General 3/10 of a mile, and there's a massive strawberry field right next to me. So I'm hoping,
Oh, goodness.
and they're already putting public utilities through. So it's my lotto ticket.
Yeah. Yeah. No, that's, I mean, long term standpoint, that sounds super exciting just to be sitting on the land. So now I know that in this space, actually, my very first investment was in, or first investment in the passive investing space was actually a mobile home fund by one of the large brands that you probably know. Um, and certainly there was some hesitation on my part investing in that space because I didn't know anything about it. So there was a big education piece that I had to go through to kind of get beyond my own prejudice of the space and start to believe in the asset class. So now my understanding is you've got obviously you've got a mastermind. But I believe you're an educator at heart. So can you talk to me or talk to the audience a little bit about what you're doing to help educate the community and the investment world?
Yeah, so I had to do the exact same thing. I grew up here in Florida with hurricanes,
Okay.
and that mobile homes aren't safe. And
Yeah.
I fought that stereotype for a little bit. And I'm not saying that they are safe. That's not the first place I'm going to go. It's one of the last places I'm going to go in a hurricane.
Sure.
But somebody at one of the meetings I was at, he said, "But there's 1965s still sitting around, right?" I was like, "Yeah." He's like, "Well, they've been through more hurricanes than you have." It was one of those like mic drop moments. He's right.
Yeah.
They're still there. Is there a risk? Yes, but a higher risk, we need a higher reward because there's also not hurricane coverage on insurance. Like, so just going around and talking about it, and social media has made it, you have to have these big, massive numbers, lots of zeros, and cool pictures for your Instagram and all that. And I say cash flow doesn't have to be sexy. I like my bank account and what I can eat off of more than some pictures.
No doubt.
I go around, I teach, I tell exactly what I do. I wrote a book on exactly what I do and my story of how to buy mobile homes. If you get educated on it, you can make money in some aspect. If you're the lender, if you're the buyer, if you're the wholesaler, there's people with these that need help solving their real estate problem, and there's just not enough people helping to solve that problem.
I love it. I love it. So you're filling a need. You're certainly helping out the folks that are living in your communities and your homes. So that's fantastic. You're educating the investment community. The big question, we as investors all have is, what do the numbers look like? Like, what do what do returns look like in comparison to maybe traditional single family or apartments or some of the other standard investments that are out there?
All right. I'm going to run through two different examples because I mentioned those 1960s, 70s, and then the 1990s. So they're not too comparable. Let's talk about the 60s and 70s. I would buy them. I haven't bought one real recently, but I'm all in around 25 to 35,000.
Okay.
That means real numbers. How much I purchased it for, my closing costs, my repairs, like the real all in. And I want that to rent for 700 to 800. Now, again, it's been like 2 or 3 years since I've bought one of that age, but now those are renting for 900 and close to 1,000. And I
Yeah.
had to put that much more money into it. So in Florida, and I hate giving exact numbers because I don't want someone to be like, "Oh, well, it doesn't fit the exact formula. I can't buy it." In
Hmm.
Florida, because I have that risk of the hurricanes, I won't even look at one that old under a 25% return. All in doesn't mean my cash on cash, my all in, because I'm going to
Hmm.
pay out a higher uh, amount to my lenders for that. Now,
Got it.
on the other side, the 1990s, I've been buying those with like an acre of land or a very desirable quarter acre. I have a stronger unit. I'm getting 1,600 and 1,900 in rent. I've been all in anywhere from 110,000 to 160,000. So
Okay.
those are much big numbers. I'm getting more dollars per month into my account, and I'm getting a smaller return on my investment. And so what have I borrowed at? I borrowed down to 6%, but that wasn't my first time borrowing. That was well after I had a good track record. My first private money, I just paid him off. He was getting 17.5% on his money, and I loved it because I
Yeah.
had no money in it, and I was making 200 and some dollars a month with no money, and he was
Sure.
making 17.5%. He didn't want me paying him off. Really, the reason our rates have been going up, I'm like, all right, I'm going to take this opportunity now.
Sure. Sure.
That is such a perfect example that we can both win if you set it up
Absolutely.
right. That's why I know you. That's why you love private money. You can sit down and figure it out with a human being. And we can.
Yeah. Yeah. That's awesome. And it's so how many years have you been doing this in the mobile home space?
I switched to the mobile home space 7 years ago ish.
Okay. And how many units do you have yourself now?
I take care of about 30. A few of
Okay.
those are, I technically rent them. I rent them from the owner and then sublet them out because that's what fit the owner's situation the best.
Yeah, arbitrage almost. Interesting. Okay. And then you've got a handful of private money folks that you're working with to really finance the business. Excellent. So what's next for Lifestyle REI and for Adrian Smude?
Well, for the Adrian Smude, let's just talk about the buying side. I don't plan to ever stop buying.
Okay.
Am I going to continue buying the nicer stuff with bigger lotto tickets and then maybe selling off, so upgrading the portfolio? Yeah,
Sure.
that's kind of the plan. And on that note, I used to have in my life vision that I wanted to be debt free. I don't have that there anymore. I am bank debt free, and that feels really good. But I
Mm-hmm.
found I really like paying my friends money because I'm helping
Mm-hmm.
them that don't want to get into real estate. So I want low debt because I do sleep better at night, but I like
Sure.
making friends money. The lifestyle
Yeah.
REI side is just to keep educating. I have a few pieces of it, and one that I'm really passionate is I'm bringing friends that run successful real estate businesses and
Mm-hmm.
giving them a platform to come teach and then go back and do their business that they love, that they don't want to do all the work behind the scenes. I'm just said, hey, Randy, come speak for 3 hours on
Sure.
your topic. And then they do. And so I'm a stage for that. And it's topics that I can't really necessarily teach on. I don't
Mm-hmm.
fix and flip mobile homes, so I bring my friend Mark Bracey in to teach how to fix and flip them because I can,
Okay.
and it helps more education get out there faster. Because if not, education dies, and that's a sin to me.
Yeah, no, I love it. I love it. You're doing amazing things in the marketplace, and obviously you have come a long way since you were the guy getting evicted in one of these homes to participating in 30 of those out there. So congratulations.
Thank you.
That's fantastic. Yeah. So what can our audience do to help support you and what you're doing?
Well, if they're wanting to learn about mobile homes, either from the lending side or the buying side, I mean, just check out my book, and if you want to, that's the easiest way to start learning. It's a content book, and
Okay.
I have more classes on that. But find out if you even want to do it mobile homes.
Sure.
They're not for you. Perfect. You spent $15 and a few hours reading. And yeah, if anyone has anything in the Central Florida area, I buy in a really tight market to keep everything
Okay.
controlled. I'm always a buyer. If I can help you out in any way, you can shoot me a message. I do better with messages because I can reply in maybe 3 minutes, 3 days, 3 weeks.
Sure.
Where I'm at in life. That's why I don't do direct coaching. But yeah, if I can help anyone out, they can reach out to me.
Awesome. Awesome. Well, very good. Well, I do have a couple of questions here that I like to ask at the end of every podcast. So we'll run through those real quickly. But if talking to the passive investor, in addition to your book, are there any other great books that you would suggest to the newer passive investor?
Yes. Invest in Debt. It's by Jimmy Napier. He's passed away now. Uh,
Okay.
Amazon is selling it for a lot of money. Someone's making money on the resale. So I believe the two locations are cashflowdepot.com and garyjohnston.com.
Okay.
Both of those still sell the book. It's written at a very low grade level, so I understand it real well. It's I think it's like a third grade. I find spelling errors, so that means it. But it teaches the financial calculator, and it's real basic. And basic is in like how it's written, but it's a
Yeah.
read.
No, that is great. I love the nuts and the bolts. Very good. Okay. And any particular podcasts that you like to refer folks to, or ones you like the most?
These days I'm actually focused more on mindset when I'm in my education. I still go to classes, but
Okay.
podcast world, Hal Elrod is probably my absolute top favorite.
Yeah.
Business and all can run, but it's not going to run well if our mind's not right. So we can learn all.
Hmm.
If our mind's not right, it's just not going to work. That's the
Yeah. No.
more of a challenge. So Hal Elrod is Miracle Morning, one of my absolute favorite things, life changing.
Absolutely. If you start the day with discipline, discipline will follow you right through to the pillow that night. So yeah, very good. Very nice. And kind of a fun one that I like to ask, do you have any recent bucket list items that you've checked off of your list or any you're planning to in the near future?
Any bucket list items? So I like to do fun, adventurous things, and within that idea of bucket list are things I don't know I wanted to do. And one of them actually going gator hunting. I did not know I wanted to go gator hunting, but I had the opportunity and I said, yeah, I'll go. And it was a lot of fun.
Nice.
The PETA followers are not going to be happy. Might get some emails. You do it in a humane way and everything, but that was fun. It was a fun experience. I like experiences that have a good memory. I don't need to go every year. It's not my thing. I want to go do something else new and fun. Ice fishing is on that list. I'm not even a fisherman, but one of my good friends, Dave Garcia, is up in Michigan, and he's got a lake house, and he said it came with everything to go ice fishing. So I'm looking at a time up there. Not for too long, because I am a Florida boy where I want it warm. But sounds fun.
Yeah.
Didn't know that was on my list until he's like, yeah, man, we can go ice fishing. I'm like, cool, that sounds new.
Yeah. And I saw a post the other day where somebody was talking about fun and exciting things that they didn't even know they wanted to do. And the guy's response was, pretty much anything that's fun and exciting that I haven't done, that's something that I want to do. So yeah, it seems like you guys are in alignment there. Well, I really, really appreciate Adrian for coming on. It's been super fun talking to you. I love the brand. I love the energy. It's just another example of, there are so many different ways to make money in real estate, both actively and passive. And you're just a great example, bringing a ton of value. So thanks so much for being on the show.
I appreciate it, Randy. Anytime.
Awesome. And to our listeners, I'd encourage you to reach out to Adrian, buy his book, connect with him on social, reach out to him via message. And on your journey to passive investing, just continue to educate and inspire yourself in the space. Educate yourself up to the point where you can make that first passive investment. And once you do, I'm sure you will be one step closer to finding your path to financial independence through passive investing. So thanks so much for being on the podcast today, and we'll look forward to connecting another time. Thank you.
Thank you.
Well, there you have it, ladies and gentlemen, another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.